Good. 2:48, 12:37 p.m. Central Time here in the U.S. In a few more minutes, we're going to see what in the world is going to happen. FOMC meeting right after the breaking news on XRP and Ripple. We start to see some blood on the streets right now, but it's okay. We're back with monies, ready to rumble and ready to buy the dip just in case. Got a few updates, fam. How we doing? Jamel, what's up, brother? Woo! It's a lot of volatility, man. It's a lot of volatility. I think what a lot of people kind of want nowadays. Ready to watch the FOMC here with you once again. There's always great opportunities, fam, and I'm just ready to see what in the world we're gonna see. So we'll let you to do its work. There's a lot of people talking today, and that makes us really, really happy, guys. There you go. Would you take a look at that, fam? I'll tell you, for being a big case, I'm surprised we're not pumping much higher. The only reasonable expectation could be that FOMC was going to bring more blood on the streets, and that's the reaction we're seeing. So I'll wait a second. We got the water with the people. Welcome. Jerome Powell, what are you going to do to us, Jerome Powell? What is Jerome Powell going to do to us, guys? I wonder. Because it's a big day, to be honest with you. It's a really big, fat, juicy day. And I'm just kind of watching like you, fam, like, where's the pump? Where's the pump? Where is it? Somebody call the pump, please. Call the pump department. Okay, guys. So I have only one position right now. Kind of like a latest update. I closed my BTCC position because the chart it's not looking good in the 15-minute candle. It's not looking good. I don't really want to take a risk right now. So we closed that one. We still have one. So waiting on the FOMC. Let's see if I can get another entry. And I have the money ready to go. So I'm trading. It's risky, but I like the risky, So we'll keep you in the know with all the updates right now. What's up, fam? Welcome. Why is XRP still following Bitcoin? Welcome to crypto, buddy. We got some major news today, of course, and there's an interview right here. I have ready for us. Where is it? It's not this one. I think I saved it on my bookmarks. Here it is. So this is the interview happened a couple minutes ago at 12. About 40 minutes ago or so. And I haven't watched this one, right? But I'm sure that, they're basically asking Brad about XRP. So why don't we go ahead and listen to that as we wait 20 minutes for for the decision on the FOMC meeting, and about 50 minutes on the actual press conference, guys, that we're going to be here watching. We've been doing this. Here it is. Here's the site. We've been watching together the FOMC for years now, and I want to thank you guys for coming in. Drop a like, fam. Consider subscribing to the channel. I have my BTCC account open too. Let me show you how much money we have ready to use. So I took some small profits, as you can tell right there. I saw the chart. I didn't like the chart. I just didn't like the chart. I was holding, man. I'm holding. Guys, this is trading, okay? All positions hold long, mega positions. I'm not selling that 100%. I'm not selling that, but this is trading. So about here, I just sold here, and I left at a nice, not taking any losses, basically, which that to me is success. Okay. So we have some cash here on this side. Oh, here it is, 3,700. Got 3,700 bucks to do whatever I want. And I don't want to do 50x. I kind of want to do in the 10 or so. Typically, I like to do the 13x, right? It's gonna be an XRP, so we'll see. I'll be ready for that. Okay. So as we are taking a look right now, XRP dumping, and in the 15 minutes, I mean, people are selling a bit. Plus, there's a Solana incoming ETF right now that is going to be launching soon. I don't know if you saw the news, but good news overall, guys. Really good news in crypto. And I wonder, well, if we have good news in crypto, why can't we have a nice, decent mega pump, right? That continues. Welcome to crypto as well. All right. I'm going to go ahead and listen up to Brad Garlinghouse as we prepare. Like fam, and welcome aboard.
Long battle. How much certainty does this provide? Is the entire case over?
So this provides a lot of certainty for Ripple, for frankly me personally, because the SEC had sued me. The SEC has abandoned their appeal, and so they filed suit in December of 2020. We won on the key parts of the case in the summer of 23. Judge Torres made a ruling that XRP in and of itself was not a security. That's almost a verbatim quote. The SEC filed an appeal about 8 months ago, and what they've now agreed is that they're going to drop that appeal. We still have a cross appeal pending, and so we go from being defendant really to plaintiff. So we now are in the driver's seat to determine how we want to proceed.
Are you dropping it?
We're going to see. It feels a lot better to be on the offense than the defense. 4 years, we spent over $150 million defending that case, not just for Ripple, but for the whole industry. I think it was really important that this SEC, the Gensler SEC, was really trying to bully and continue lawfare, filing lawsuits and lawsuits and lawsuits against crypto companies. That's over now, and I think that's great for the U.S. crypto industry and, frankly, great for crypto at large.
I mean, to that end, if you're looking at a new SEC, why not drop the case at this point? Why not clear the why not clear the water?
Well, that certainly is an option. I mean, again, it's clear the SEC has said, I think in retrospect, never would have brought this case. The judge did rule in certain instances back in 2015 and 2016, some XRP sales that we sold to accredited investors, to institutions, that those had constituted a security. And so there was a $125 million fine that's sitting in escrow. We wouldn't mind having that back. That's on the table. And I think there's some nuances to how this will play out. But it was important for us, for really the whole XRP community, for them to know that the case is over. For all intents and purposes, the case is over. The SEC is no longer pursuing this.
But to that end, to your point here, the court decision had ordered you to pay a $125 million civil penalty for exactly what you're talking about. Is that $125 million paid? Is what you're saying that's still up for dispute?
Yeah. Well, it's not a dispute. I mean, that's sitting in an escrow, and depending upon whether or not we decide to continue with our appeal, we could walk away and the whole thing be done. On the other hand, when you have a case where there were no investor harm, no investors lost any money, you're kind of like, wait, why are we here? And it really goes back to Gary Gensler fighting a fight that was about power grab, that was about overreach of the bureaucracy to try to take a new industry. That what we're seeing now happen in Washington is smart legislation will come forward. You're seeing that happen with stable coins in real time. I think you'll have a market structure bill, is what it's described as, to provide clarity and rules for the SEC and CFTC.
We will look at the bigger picture. Right. We're going to have you for a little while this morning. But do you think that part of this means fighting it till the very end to make sure even that part of uncertainty around being sold to certain investors classifies as a security? Is that what you are fighting for ultimately at this point?
Well, I mean, at this point, all we're fighting for is, do we want to fight to get the $125 million back? And look, I'll be honest, would I have walked away from that before they appealed, before President Trump put Paul Atkins and Scott Bessent and David Sachs as critical, key, very smart leaders in this industry to bring this industry back on shore? I would have walked away. Now you look at that, you're like, this case in this SEC never would have been brought. And so where we find ourselves is great. There's a clear legal victory to say XRP is not a security. That was good for the industry. But there's pieces of it that we think could be kind of cleaned up. And the question is, do we want to fight that fight, or can we come to an agreement with the SEC to drop everything?
The whole idea that this wouldn't have been brought under this SEC, have you had that specific discussion with Paul Atkins and with David Sachs?
Well, Paul Atkins hasn't yet been confirmed. He's a very knowledgeable guy about this industry and has been for a long time. But I've had conversations. I won't comment on specifics with certainly, I think David Sachs would agree that this is a case that didn't make a lot of sense in the beginning. Again, there was no investor harm. This was about Gary Gensler waging a war against this industry.
It's interesting. I want to also point out that the affiliated token, of course, XRP, has been up roughly 14%, now about 13% in the last 24 hours. One thing a lot of people had looked at, we're thinking a lot about how the administration is handling crypto assets, particularly outside of Bitcoin. Why do you think XRP wasn't specifically named in the executive order for the digital asset stockpile?
Well, so XRP was named by the president on Truth Social. He posted something saying that there should be other tokens, that there's going to be a Bitcoin strategic reserve and then a crypto stockpile that would include things like XRP.
Days later, the executive order didn't include it. Why was that?
I don't know what specifically was in the executive order. My understanding is there's going to be a Bitcoin strategic reserve. There'll be a crypto stockpile representing other cryptos. And I would expect that will include XRP. Look, at the end of the day, I think the stark contrast is in the Biden administration, we couldn't get a meeting with people at the White House. Now we're welcomed into the White House. And that's just a massive change. I think we want this industry to thrive in the United States. We don't want to push it offshore where you have fewer regulations.
I think the reason I keep pushing you too is because I think now it's widely accepted that this is a pro-crypto administration. But the details, that is what's causing an overhang, the uncertainty of the details. So to the extent you have confidence, right, about XRP being in that stockpile or otherwise getting more support for an ETF, for example, where does that confidence come from, and what kind of timeline do you see it happening on?
So I have immense confidence on the ETF. I think there's 11 different filings pending with the SEC to launch ETFs from everybody.
I'm so ready for the ETFs, bro. I mean, I'm like just trying to really get the best position because we're going to be fine, guys.
From Bitwise to Franklin Templeton and a whole bunch of people in between. I think those will be live in the second half of this year. We have seen even outside the United States, you have live ETPs. And at a time when a lot of outflows are exiting some of the crypto ETFs, you're seeing inflows into XRP. And I think that's because you had this false negative pressure from the SEC, this kind of an exogenous hand holding things down that's now being released. And that's great for the market. That's great for builders within the XRP ecosystem globally.
One more on the stockpile.
Yeah.
How much XRP would be in it? Where does it come from?
Well, my understanding of what I read about.
I like this interviewer, I mean, it's all about XRP and really the questions of the people. That's what a lot of people, it's so refreshing.
I think there are some questions, and that the devil may be in the details as Treasury implements some of this.
Absolutely in the details.
But my understanding is that the stockpile will be represented by seized other cryptos other than Bitcoin that then will be in that stockpile. So to the extent that various law enforcement agencies have seized cryptos, which would include XRP, that those would go into the stockpile in addition to the Bitcoin strategic reserve. That's my understanding.
Let's go. Okay. Good stuff. I like this one. So today we watch and we listen to Brad Garlinghouse everywhere, right? The video at the Digital Asset Summit. This breaking story with the interview, right, with Bloomberg. Now, I think it's already live. Yep, I knew it. Who is ready to see what Jerome Powell has for us? Oh, man. I'm so ready, guys. It's there. So in a few more minutes, we're going to see what the decision of the Federal Reserve is going to do. 99% say it's going to be a pause. So I'm not going to be surprised if it's a pause. If it's a cut, which I don't think it's going to be a cut, it just cannot be a cut. But if it's a cut, I'm going all in. Selling my glasses, selling my water, selling Just all in. Boom. Do it. I'm doing that basically. But it's not going to be a cut for sure. A cut is super bullish right now. Mega bullish. We have about 8 more minutes. 8 more. Bring it on. 100%, brother. So this is happening soon. That's really, really nice, man. BTC right now at 84,000. It went to 84. It went down to 83. So it's just a lot of, speculation, man. We got the monies here. Don't get me wrong. Like I wanna be, longing, right? But I just wanna, I've been in the game for a while, and I know there's, people who are willing to bring the price much lower, and I just want to get the best deal possible, right? So we got the money there. Worst case scenario, I just buy it on spot trading, and that's it. Like, there's really I'm not losing here. I'm just buying long, and that's it. I mean, I can just buy and hold or do a little bit of trading. It's up to me, right? It's my money. It's up to me. But I just want to make sure that I'm putting me in the best possible case. Fam. Ooh, what is this? I'm told a big announcement regarding Donald J. Trump's plans for the next step in crypto policy is coming imminent. Ooh, don't you know, pump it up. You got to pump it up, and don't you know, pump it up. That's what I'm talking about, baby. That's why we're bullish here, Man, what is this? Whether it's called the Ethereum test or something else, the SEC believes the trading of XRP like Ethereum is sufficiently decentralized that makes no sense to keep the appeal of the second part of the Torres ruling. However, Brad Garlinghouse wants to describe this test as the test bottom line. A lot of people who are going and throwing shade at this guy. I know, I've seen it. Yep. So this came out 4 hours ago, and so many people just went nuts. I love it, man. It's good. It's good. You got 900 votes, fam. FOMC will be neutral, bearish, bullish. And all people are saying, I just want XRP to pump. I got you, fam. I got you. Let's go ahead and do hashtag FOMC. We're going to be getting the results pretty soon. Yep, that is Jerome Powell and everybody, less than 10 minutes to go, guys. Good afternoon, and we'll see what actually happens. For some reason, we start dumping. That is just a great opportunity for me to buy, more XRP. But right now, everything's on the table. All eyes on crypto, right? And if you guys want to join me in trading and finding new opportunities, right? Click the first link down below or the first link on top of the chat. You're more than welcome to join me on BTCC. There's a bunch of different giveaways and Cybertruck and to go to Token 2049. So I am proudly, collaborating, and I'm very happy. You click here. There's a Tesla Cybertruck giveaway, $1 million prize pool, Tesla Cybertruck, Rolex watches, Token 2049. That's the conference I want to go in Dubai. They also have in Singapore, and 7-star hotel stay awaits. So the way to start is just join me, and there's a bunch of things waiting for you, right? I'm already trading, and I'm not the best one, but I just want to make sure that I'm in the game. I'm already there pushing and going through things. Awesome. Looking good, Oscar. All refreshed. Yeah, I know. I love this shirt, guys. By the way, look. It's from CoinW. It's super tight. Like I feel like Spider-Man. I don't know. It's just super nice, man. It's refreshed. I ate a little bit, of course. Made a little video too, just to keep everybody in the know. But today was supposed to be about the FOMC, of course. Today was supposed to be about the FOMC, but about 4 hours ago, the world changed as we got the mega news. So for those people asking, but Oscar, we're not pumping enough. I know it might be because of this, what's about to happen. Really depends how Jerome Powell goes about this, So fingers crossed, and we shall survive. We shall survive, We shall survive. What's up, Giovanni? I don't see any bad news from Jerome Powell to say, especially with inflation lower than expected. What do you think? Exactly. But, the thing is that even with the best news for XRP right now, still people are selling, right? Not by a lot, but still people are selling. So just gotta get the best deal possible, you know. Maybe at 245, 246, 244, I'll go back again in a nice long, because I'm ready. Yep. It's gonna be good, guys. Welcome to the 2,000 people joining us. How's it going, fam? Welcome to the FOMC XRP Day. Always here already, and grateful that you're choosing us because there's a lot of people having a chat. 2 minutes. 2 minutes to go for FOMC decision. And Oscar Ramos has some money on the side ready to go because, man, it's time. It's time. All right. There's BTC. There's XRP. Let's go ahead and do this. You can tell that the number one coin right now in percent change is going to be XRP. Then we have Toncoin. We have Stellar, Ethereum, Algorand, right? So really nice. Really nice. All right. Don't you know, pump it up. You got to pump it up, and don't you know, pump it. I'm excited for this one, for the Crow Fam too. So that's really good news. Already telling a lot of people about, you know, my update. 30,000 views or so. People are watching, which we love it, right? We love it. I like how I ended here. Where are all those XRP haters at? Where are all those XRP haters at? All right, fam. Seconds to go. Let's see what happened. Just in case I have my BTCC ready. Just in case I have my BTCC ready. Just in case. 1 p.m. Decision time. Rates unchanged. Boom. 249, 250. Rates unchanged. Just in. The Fed decides to keep rates the same. No change. 250. Ooh! Look at that beauty! Ay, ay, ay. Some initial pump. Not bad. Breaking news, everybody. Rates unchanged. Federal Reserve leads interest rates unchanged. Remains 4.25 and 4.5. Breaking news, guys. There it is. You see how quickly? Boom, boom. Boom, boom. Quickly. Why? Because that liquidates mega shorts. That liquidates mega shorts like super fast. Okay. Putting that aside, let's go ahead and XRP chart. Okay. Let's go trade. Trade XRP to 50. That was a no-brainer. Yeah. Rates unchanged. There it is. There it is. Okay. 251. Okay, let's go ahead and do something. 250. Too early. They have to wait a little bit. Trying to break. Let's go to the 5 minutes right here. Look at that. Oh man, it's just like, Jeez Louise. Haven't opened anything right now. I'm just kind of waiting my money out. Let's take a look at BTC. Yeah, same BTC 84. Look, Bitcoin. Bitcoin literally just went through like boom, boom. That was pretty crazy. Okay, guys. About 30 minutes to go for the FOMC. 30 minutes to go for FOMC. We should be able to watch it pretty soon. Okay. Let's go ahead and do something. Okay, I'm gonna start moving some monies out because Oscar wants some positions in just in case. I'm gonna move to future. Let's go ahead and just 1500 because honestly, confirm to transfer. Confirm. Yeah, I don't have any open position. What do you mean? Okay, good stuff. How much do I have? I have 2200 here. That should be good. I'm gonna leave. How much do I leave? Everything will be 2200. I think I'm gonna move this. Okay, yeah, I want to be a little bit more risky, but with less money because I already know me. Like I need to. Okay, 1800. I think that's good. That's good. So what I want to do is I want to buy that spot trade. I want to keep accumulating more XRP. Keep accumulating more XRP. That's been my strategy lately. Just don't worry about the prices. Just accumulate XRP. Okay, wallets. Let's transfer to spot trading. That's the one thing that I have to do all the times. Like you have money, you got to transfer to spot, the futures to wallet, spot, futures to wallet. It's a mess, right? But it is what it is. All right, I got 2,000 on spot trading now. So 2,000 at 250. I like it. Now it's 249. That's much better, right? Let's go to XRP. I'm just ready for anything right now. With money's ready. I did close my BTCC position. Yeah, that's something I just told everybody right now a couple minutes ago. So that money, what I'm doing right now is I'm dividing it to spot and futures, right? Just because there's a lot of decent volatility. So I'm still going to open a new futures, but soon. Just looking at the chart so I can read how things might be moving up. But it's just the rates unchanged. That's something that we all knew in a way, like we've been telling you over the last couple of videos. I want to make sure that what he says during that press conference is going to confirm that we can go higher, right? Because right now, those red candles are coming. Yep. Don't you know, pump it up. You got to pump it up. And don't you know, pump it up. Happy to see you, everybody. Welcome. Drop a like, fam. Consider subscribing to the channel and turn on those notification bells. Welcome. How we all doing? So happy to be here with you guys. 247, 245. Man, some people really want blood on the streets, I gotta tell you. Some people really want some blood on the streets. I'm gonna leave that position open at 230. Just in case. Okay, I just got my phone ready for anything at this moment. I'm gonna be here with you guys, so I don't really need to act before I have all the information. So no worries. What's up? Aloha. Nice to have you guys. Welcome back. Woo! Got money ready. Got money ready.
Itself was not a security. That's almost a verbatim quote. The SEC filed an appeal about 8 months ago, and what they've now agreed is that they're going to drop that appeal. We still have a cross appeal pending, and so we go from being defendant really to plaintiff. So we now are in the driver's seat to determine how we want to proceed.
Are you dropping it?
We're going to see. It feels a lot better to be on the offense than the defense. 4 years, we spent over $150 million defending that case. Not just for Ripple, but for the whole industry. I think it was really important that this SEC, the Gensler SEC, was really trying to bully and continue lawfare, filing lawsuits against crypto companies. That's over now, and I think that's great for the U.S. crypto industry, and frankly, great for crypto at large. Well, I mean, at this point, all we're fighting for is, do we want to fight to get the $125 million back? Look, I'll be honest, would I have walked away from that before they appealed, before President Trump put Paul Atkins and Scott Bessent and David Sachs as critical, key, very smart leaders in this industry to bring this industry back on shore? I would have walked away. Now you look at that and you're like, this case in this SEC never would have been brought. And so where we find ourselves is, great, there's a clear legal victory to say XRP is not a security. That was good for the industry. But there's pieces of it that we think could be kind of cleaned up. And the question is, do we want to fight that fight, or can we come to an agreement with the SEC to drop everything?
Bam! What up? Okay, I haven't opened anything. $3,700, $3,700 ready to go at any point at what I want. Haven't opened anything on BTCC right now. So I'm just like, it was a good decision to close that position. Gotta go with my gut. Gotta go with my gut feeling sometimes. And I'm happy I did. I just wasn't liking the chart. I look at the charts every single day. I just wasn't liking the chart. I saw a double top, and I have my Genius Trader. It's called Mousepad, and it's a big one. So I see all the charts right here. I wish you could see it, right? But basically, it tells you right here, right? Double top is a bearish pattern, and I'm like, it's a bearish pattern. So I really have to be looking at the charts. Right? As I was eating today, I'm like looking at the charts. So it helps. It helps. Welcome to almost 3,000 people joining us. How you doing, guys? Happy to see you, man. Welcome, welcome. I do want to enter, but I waiting a little bit longer. We got about 20 more minutes to go for the price of crypto to react to Jerome Powell. It's gonna be pretty crazy, you know. Woo! You will see a pump when the regulation comes out for stable coins. What's up, Secretary in the house? Happy to see you, buddy. Welcome, welcome. 2.47. I think I'm gonna get some. Let's get some, you know, $500 spot trading. I need to do this. 247 under 250. I'll take it. I'll take it. Just to get my feet wet right now. Perfect. Boom. First position started. Spot trading, entering at 247 right now. Not bad. Not bad. I like it. Welcome to all the new subscribers. How are we doing, guys? Good stuff. All right. Go back here. 248. Take a look at what's going on here. XRP wins. Jake. 249. Yep, we're about to hear from this man. We're about to hear from this man soon. 49, okay. Got a reject here at 250. Okay. 259. We weren't able to pass it to 59, right? Got a nice rejection right here. So the price was at 10, almost 11 a.m. Central Time, where it topped at 257. Okay. Coin Bear in the house. What's up, brother? Happy to see you and welcome. Shout out to one of the best content creators for Crow. Love to have you, buddy. Welcome aboard. Robbie in the house. What's up, buddy? Welcome. Amsterdam watching too. Let's go. Hi, guys. Quite the biggest news in many years for XRP, and the price only go up slightly. I wish I could answer that to you, buddy. But sometimes it happens, you know. That's the way it is. Under 250, let me get another $500. We'll get another $300. Okay, boom. Under 250 XRP, that's a 2x for $5. I'll take it, bro. We're starting to see some of the change in pace in the charts. I like that. I like that. Coin Baron, are you here, brother? Give me a sign. Give me a sign, Coin. Are you here? I wanna give you something, bro. Smack the like button. Thank you, Secretary. I appreciate that a lot. Welcome. Bear Trap, you think so? Pump it. What's up, 3 Diglets? Nice to have you, buddy. Welcome. Okay, so look at Bitcoin. Always watching. Coin Baron, great guy, brother. Oh, I already had you as moderator. Okay, that's what I was about to do. So thank you, bro. I was gonna give you mod. Let's see how people react right now. A 40x short whale has closed their 27.5 million short position just before the FOMC meeting. Oh, okay. 40x whale closed 27.5 Bitcoin short. Does that mean that we're going much higher? That's something that people are liking. 249. We went to 245. Let me see. Let's go to futures now. Futures. Trade. Antoine, new ceiling in the house. What's up, buddy? Happy to see you and welcome. Thank you so much for the first kind of super chat. Appreciate it. Trade. Here it is. Decisions. Many decisions to be made here. Bitcoin at 84,000, brother. You got to pump it up, and don't you know, pump it up. Good stuff. Oh, there it is, 250. Things seem bullish right now, guys. Things seem bullish right now. That's what we like to see. 15 minutes to go, everybody. 15 minutes to go for the FOMC. Seems that people are liking what they're hearing. So let's do 10. I'll be checking very closely. XRP, let's do it. Cool. Okay. Checking very closely. Liquidation 233. Okay, good stuff. Okay. 250. 250. Okay. Good stuff. Insiders buying, you think so? XRP $3 placed by market cap again. Woo! 251. All right. Is there any other great position to buy right now besides XRP? Or just XRP alone, guys? Tell me in the chat. Are you buying something else or XRP alone? Let me see those stickers. Cardano, Stellar. Pretty nice. See Cardano there. Ondo, Doge, Ethereum, HBAR, Solana. Oh yeah, Solana, man. Oof. Solana 131, right? Look at those. Look at those nice stickers, everybody. Keep an eye on those. Fam. Keep an eye on those stickers, I gotta tell you. 251. Come on, baby. I still have $1,000 to spend. Just gonna, because I'm a weak person when it comes to not spending my money when I get too bullish. Because I know that at any moment we can just go and boop, balloon. With the right news, you know. with the right news. Eleanor Terret is live. That's nice. All right. Like, so easy to go past 260, honestly. So easy. As people are waiting, we got the rates unchanged. Just watching, my levels. Just watching my levels. I don't want to lose money. We're not here to lose money when it comes to trading, That I can tell you. SUI is also up, which is nice. Ooh. What is that? There's no audio? Nope. They don't have audio. Not working. I think. It's okay. I'm here for the delicious XRP. What's up, Byron? Nice to have you, buddy. Welcome. The Fed is slowing QT. The committee will slow the pace of the decline. That is why. Oh, yeah, sure. I forgot. My apologies. My apologies. My apologies. I was just looking at XRP too much. My apologies. I forgot they released this. I'm so sorry. Okay. What is this? Where is it? Here, statement. Okay, what is this? Recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low level in recent months. Labor market conditions remain solid. Inflation remains somewhat elevated. The committee seeks to achieve a maximum employment and inflation at the rate of 2% over the long run. Uncertainty around the economic outlook has increased. The committee is attentive to the risk to both sides of its dual mandate. In support of its goal, the committee decided to maintain the target. The committee will continue reducing its holding treasury bonds, treasury and agency debt, and agency mortgage-backed securities. Beginning April, the committee will slow the pace of the decline of its security holdings by reducing the monthly redemption cap on treasury securities. The committee will continue to monitor implications of the incoming information. Based on what Benjamin is saying right here, the Fed is slowing down QT quantitative tightening, which is very bullish in a way. So the committee will slow down the pace of the decline of the securities holdings by reducing the monthly redemption cap on the treasury securities from 25 billion to 5 billion. Okay. Initially what people wanted to hear, now it's all in that FOMC press conference. Good to know. There it is, everybody. Watching live soon. 4 years of court case and people are selling. I know. Right? I'm like, can we just pump, please? Like, be patient, brother. You've been waiting for so many years, and the first thing you want to do when XRP is out or is soon to be out is take profits. That's kind of like what people are doing lately, Big nothing burger, Coin Baron says. It might be a big nothing burger, but it's my big nothing burger, guys. Is it going now? No. My audio works. Yeah, my audio works. I want to listen, but Who knows? No sound, right? No audio, no sound, no sound. No. Who knows? Case over and still broke. It's okay, fam. We're gonna be okay. Look at this. Look at this. Cointelegraph. Bullish. XRP breaks past 250, surging 14+% as well. With 1 million XRP now hold 46.4 billion coins, increasing their holdings by 6.5% in 2 months. Let's read that again. Whales with 1 million plus XRP now hold 46+ billion coins. Wow. Guys, I'm not a whale. I hate poor people. I believe it. Guys, we're not whales. I still need a lot more XRP, to be honest with you. Case is over, but already out of funds. It happens. Bro. Case dismissed, and we move pennies. Started to think it's overhyped, and I've wasted money. It's okay, you know. You're more than willing and more than free to do whatever you want. At the end of the day, I'm holding for years and until XRP is at a price that people cannot believe it. That's my exit price. That's my exit price, you know. I mean, about 5 more minutes. Are you ready? We got over 3,000 people watching us. Let's go, fam. We got about over $1,000 ready to go in trading or spot trading. I am just ready. Hopefully, you know, XRP can have, you know, has some gas left in the tank and can go back to the 250 plus, because I know it can. I mean, it's a big day for us. It's a big day for us. All right. Should be good. We love XRP 100%, brother. I'm investing in tissues. I'm investing in tissues. That's good, man. That's a good one. Let me take a look at the latest here. Breaking Fed announced QT ending on April 1st. I mean, that to me sounds bullish. SEC roundtable on Friday too. Oh, that's true. In a few more days, we have an SEC roundtable, so there's gonna be conversations about crypto and digital assets. So they're coming pretty nice and steady. So, summary of the Fed FOMC statement. Number 1, the Fed delivered a dovish pause. Number 2, the Fed FOMC left interest rates unchanged, but still signaled 2 cuts in 2025. The Fed members seeing the benchmark rate falling to 3.9% this year. The rate cuts outlook for 2026-2027. The FOMC downgraded its collective outlook for economic growth and gave a bump higher to its inflation projection. And in addition to the rate decision, the Fed announced that a further scaling back of its quantitative tightening program, in which it's slowly reducing the bonds it holds on its balance sheet. Instant reaction, stock rally, US dollar trembles, bond yields sink, and gold jumps. Key takeaways: the Fed's updated dot plot and economic projections emphasize the rate cuts are coming soon. Nice. We're just too early right now, fam. I hope it was doing a little bit much better, but it's okay. That's why we diversify. My new liquidation price is under 240, so I'm good, and I also have, you know, my stop losses ready and ready, so it should be okay. But I'm watching every move right now too. Well, guys, About 2 more minutes to go. Time to go. What's up, Psycho Pearl? Nice to have you, buddy. Welcome back. I'm scared, Oscar. You're scared. Well, we'll see what happens, you know. We'll see what happens. I'm bullish, man. It's just that I know that everybody's taking the chance to, you know, cash in on XRP for this one, for this specific day. That's true. And BTC right there too is coming down a little bit after a nice pump of 1%. Just that was the initial reaction right here. About 1%. So let's see how the market reacts, you know, at the end of the FOMC. Let's see. We're holding 350,000 XRP. Let's go, man. All right, fam. About to go. Go ahead and refresh. Perfect. And hopefully they're not gonna rug us. Don't rug us yet, please. Don't rug us. We got families. No rate cut, but still bullish. We'll see what happens, fam. I'm gonna go ahead and unmute as usual, and I'll be replying to the comments, and we'll listen to Jerome Powell, what he has to say now. Welcome aboard, fam. Thank you for being with us.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. I'll have more to say about these decisions after briefly reviewing economic developments. Economic activity continued to expand at a solid pace in the fourth quarter of last year, with GDP rising at 2.3%. Recent indications, however, point to a moderation in consumer spending following the rapid growth seen over the second half of 2024. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.7% this year, somewhat lower than projected in December, and to rise a bit below 2% over the next 2 years. In the labor market, conditions remain solid. Payroll job gains averaged 200,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and is held in a narrow range for the past year. The jobs to workers gap has held steady for several months. Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year and 4.3% over the next 2 years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Some near-term measures of inflation expectations have recently moved up. We see this in both market and survey-based measures, and survey respondents, both consumers and businesses, are mentioning tariffs as a driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.7% this year and 2.2% next year, a little higher than projected in December. In 2027, the median projection is at our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Looking ahead, the new administration is in the process of implementing significant policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. It is the net effect of these policy changes that will matter for the economy and for the path of monetary policy. While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves. As we say in our statement, in considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We do not need to be in a hurry to adjust our policy stance, and we are well positioned to wait for greater clarity. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. An admittedly challenging exercise at this time in light of considerable uncertainty. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year and 3.4% at the end of next year, unchanged from December. While these individual forecasts are always subject to uncertainty, as I noted, uncertainty today is unusually elevated. And of course, these projections are not a committee plan or a decision. Policy is not on a preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Our current policy stance is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. At today's meeting, we also decided to slow the pace of decline in our balance sheet. Since we began balance sheet runoff, our securities holdings have declined by more than $2 trillion. While market indicators continue to suggest that the quantity of reserves remains abundant, we have seen some signs of increased tightness in money markets. Beginning in April, the monthly cap on Treasury redemptions will be lowered from $25 billion to $5 billion. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we are leaving the cap on agency securities unchanged. This action has no implications for our intended stance of monetary policy and should not affect the size of our balance sheet over the medium term. The committee also continued its discussions as part of our 5-year review of our monetary policy framework. At this meeting, we focused on labor market dynamics and our maximum employment goal. As we have indicated, our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Howard. Howard Schneider with Reuters. Thanks for your time. So two things on sort of the real side here, inflation and then GDP. How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation. In terms of your sort of looking through question, too soon to say about that. As I've mentioned, it can be the case that it's appropriate sometimes to look through inflation if it's going to go away quickly without action by us, if it's transitory, and that can be the case in the case of tariff inflation. I think that would depend on the tariff inflation moving through fairly quickly, and it would depend critically as well on inflation expectations being well anchored, longer-term inflation expectations being well anchored.
Well, I guess I'm looking at the out years here, and the fact that the policy path doesn't change at all, and inflation is unchanged in the out years also. Doesn't that imply you all have basically decided that there is no signal here, and that it's just we're back to transitory again?
So I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out. And the fact that there wasn't much change, I think that's partly because you see weaker growth but higher inflation. They kind of offset, and also, frankly, a little bit of inertia when it comes to changing something in this highly uncertain environment. I think there is a level of inertia where you just say, maybe I'll stay where I am.
Colby. Thank you. Colby Smith with the New York Times. You just described inflation expectations as well anchored, but has your confidence in that assessment changed at all, given the increase in certain measures and the high degree of uncertainty expressed by businesses, households, and forecasters?
So on inflation expectations, of course, we do monitor inflation expectations very, very carefully, basically every source we can find, and short-term, long-term, households, businesses, forecasters, market-based. And I think the picture broadly is this. You do see increases widely in short-term inflation expectations, and people who fill out surveys and answer questionnaires are pointing to tariffs about that. If you look in the survey world, if you look a little further out, you really don't see much in the way of an increase. Longer-term inflation expectations are mostly well anchored. If you look at the New York, for example, then you have market-based, and it's the same pattern. People in markets are pricing in break-evens. Some higher inflation over the next year must be related to tariffs. We know from the surveys, but if you look out 5 years or the five-year forward, you'll see that break-evens are either flat or actually slightly down in the case of the longer-term one. So we look at that, and we will be watching all of it very, very carefully. We do not take anything for granted. It's at the very heart of our framework, anchored inflation expectations, but that's what you see right now.
And how much weight do you put on the deterioration in consumer confidence surveys? You said recently that this is perhaps not the best indication of future spending, but I'm curious, what you think is behind this deterioration, and to what extent it could be a leading indicator for hard data.
So let's start with the hard data. We do see pretty solid hard data still. So growth looks like it's maybe moderating a bit, consumer spending moderating a bit, but still at a solid pace. Unemployment's 4.1%. Job creation, most recently, has been at a healthy level. Inflation has started to move up now, we think partly in response to tariffs, and there may be a delay in further progress over the course of this year. So that's the hard data. Overall, it's a solid picture. The survey data, both household and businesses, show significant rise in uncertainty and significant concerns about downside risks. So how do we think about that? And that is the question. As I mentioned the other day, as you pointed out, the relationship between survey data and actual economic activity hasn't been very tight. There have been plenty of times where people are saying very downbeat things about the economy and then going out and buying a new car. But we don't know that will be the case here. We will be watching very carefully for signs of weakness in the real data. Of course we will. But given where we are, we think our policy's in a good place to react to what comes, and we think that the right thing to do is to wait here for greater clarity about what the economy is doing.
Nick Timmeros, The Wall Street Journal. Chair Powell, Chair Greenspan once defined price stability as an environment in which inflation is so low and stable over time that it doesn't materially enter into the decisions of households and firms.
Can you say that today, that we have that price stability, that households and businesses are ignoring price growth? When you see buy in advance psychology, big changes in inventories, and surveys that show consumers, at least in the short run, expect higher inflation.
So I do like that definition a lot. In fact, I used it at the recent conference where I spoke. So I think a world where people can make their daily economic decisions in businesses and they're not having to think about the possibility of significantly high inflation. We know inflation will bounce around. That is price stability. I think we were getting closer and closer to that. I wouldn't say we were at that. Inflation was running around 2.5% for some time. I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at they wrote down meaningful decline in growth. From 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3, and so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Edward.
Thank you, Mr. Chairman. Edward Lawrence with Fox Business. So with near 4% unemployment rate, that should be low enough to bring people in from the sidelines in terms of hiring. But we're seeing the hiring rates have been stuck at 2023, 2024 levels. So what's going on there?
Yeah, so that's a feature has been for some time a feature of this labor market. You have pretty high participation accounting for aging. You've got wages that are consistent with 2% inflation, assuming that we're going to keep getting relatively high productivity. We've got unemployment, pretty close to its natural level. But the hiring rate is quite low, but so is the layoff rate. So you look at initial claims or layoffs, so you're not seeing people losing their jobs, but you're seeing that people who don't have a job having to wait longer and longer. And the question is, which way does that break? If we were to see a meaningful increase in layoffs, then that would probably translate fairly quickly into unemployment, because people are, it's not a big hiring market. We've been watching that, and it's just not in the data. It hasn't happened. What we've had is a low firing, low hiring situation, and it seems to be in balance now for the last 6, 7, 8 months. That's where we are. There's healthy levels of job creation, too. So overall, it's a labor market that's in balance, and we watch it very carefully.
So then, have we seen the new administration's policies in the economic numbers yet? And when do you anticipate that happening?
In labor or in other?
In labor and inflation, just across the economy, have we started to see the new policies take effect in the numbers?
Only in a kind of an early way. I mean, it's only been a few months, right? For example, the layoffs that are happening here are, they're certainly meaningful to the people involved, and they may be meaningful to a particular neighborhood or region or area, but at the national level, they're not significant yet. But we don't know. We don't know how far that will go. We'll find out much more. I mentioned that you saw we've had two very strong goods inflation readings in the last 2 months, which is very unexpected. I think hard to trace it to specific tariffs, but it must have something to do with, it's either noise and it'll come back, and that's very possible too. But if it is persistent, then it must be to do with people buying ahead of tariffs or raising prices ahead of tariffs and things like that. Those kinds of things happen, and they're very, very hard to capture because so much of it is indirect. A great example is their washing machines were tariffed in the last round of tariffs, and prices went up. But prices also went up on dryers, which were not tariffed. So the manufacturers they just kind of followed the crowd and raised it. So things happen very indirectly. And so there'll be a lot of work done in coming months to try to trace all that through. But ultimately, though, it's too soon to be seeing significant effects in economic data.
Craig.
Craig Torres from Bloomberg News. Thanks, Chair Powell. You said transitory price increases from tariffs are the base case. Transitory is the base case. Wasn't it the base case last time? And didn't the FOMC forecast lower inflation ahead last time? And wasn't the lesson that it quickly got into services, haircuts, daycare, everything else? And so I'm just wondering why the 9 aren't taking that on board and are cutting twice this year.
When you say last time, are you talking about the last?
Pandemic, yes, during the pandemic.
You could have been talking about the last time there were tariffs, in which case the inflation was transitory. Yeah, no, of course, we're well aware of that. And, it's still the truth. If there's an inflationary impulse that's going to go away on its own, it's not the right policy to tighten policy, because by the time you have your effect, you're in effect by design, you are lowering economic activity and employment. And if that's not necessary, you don't want to do it. In real time, as we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation. But I mean, we have to look at this as a different situation. There are differences and similarities. I mean, it's a different time. We haven't had real price stability fully reestablished yet, and we have to keep that in mind. And we hear that people are very reluctant to take on to allow prices to go up. At the same time, we hear that businesses are intending to pass many of these prices through. So it's hard to say how this is going to work out.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. The Bank of Canada, in its last policy statement, said monetary policy cannot offset the impacts of a trade war. What it can and must do is ensure that higher prices do not lead to ongoing inflation. I wonder if that kind of reflects your own sense of prioritization faced with higher prices and weaker growth, that the idea is you have to take care of inflation.
So we have two goals, right? We have maximum employment and price stability, and we have to balance those. And there can be situations in which they're in tension, right? And we actually have a provision in our consensus statement that says what we should do in that case. That's a very challenging situation for any central bank, and certainly for us. And so what we say that we'll do is we'll look how far each of those two goals is, each of those two measures is from its goal. And then we'll ask how long we think it might take to get back to the goal for each of them, and we'll make a judgment because our tools work in one direction. We're either tightening or loosening. So it's a very challenging situation. Let me say, we don't have that situation right now. That's not where the economy is at all. It's also not where the forecast is. I don't know any mainstream forecast that really show significant problems like that.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, there could be within 12 months a 1 in 4 chance of a recession. So the question is whether whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Chris.
Hi, thank you. Chris Rugaber at Associated Press. As you know, I guess last night, President Trump fired 2 members of the Federal Trade Commission, an independent agency, and this could cause the kind of legal fight about the administration's power to fire independent people. If those firings stand, is that a threat to the Fed's independence? Could he do the same thing to the Fed board?
So I think I did answer that question in this very room some time ago, and I have no desire to change that answer and have nothing new for you on that today.
Well, maybe I'll have another mulligan. As you know, I wanted to go back to the consumer sentiment, particularly the inflation expectations in the University of Michigan survey. In the summer of 2022, you cited the rise in the long-term inflation expectations in that index as the reason that you went big with a 3/4 point hike. So I know you've talked about all the different measures now, but you seem to not be placing the same weight on that. And so I'm just wondering, are you dismissing that, what we saw last week from the University of Michigan, or does that carry the same weight as it did in the past?
So I mentioned it back then, but in no way did I place a huge weight on it. I think that was a ex post story, but it wasn't the case. That was a preliminary reading, and so is this. And it's also, this is that Michigan, the one you're referring to, the longer term thing. We look at it, we don't dismiss data that we don't like, we force ourselves to look at it, but it is an outlier compared to market-based and compared to other survey-based assessments of longer run inflation expectations. So we got to keep that in mind. And I would just say we look at all of them, and that one's kind of an outlier, but nonetheless we take notice of it.
Thank you.
Michael McKee from Bloomberg Radio and Television. There's a worry on Wall Street that when you say you want to study the net effect of the fiscal policies we may see on the economy, that you would end up waiting too long and be behind the curve in responding to any downturn. How can you reassure people that you can spot a problem early enough unless you decide to be preemptive?
Yeah, look, we're aware of we're well aware of how things are going to evolve and the timeframes and all that, and we will use our tools to foster achievement of our goals to the best we can, and of course we're going to try to be timely with that. For right now, the hard data are pretty solid. We are obviously aware of the soft sentiment data and high uncertainty, and we're watching that carefully, and we think it's a good time for us to wait for further clarity before we consider adjusting our policy stance.
Do you think it's going to be hard to get clarity in a government by tweet? I mean, do you have a feeling that at some point you actually will have a forecast you can trust?
Yes, I think we will. It's hard to say when that will be. These decisions are going to be made, and they're going to be implemented, and then we'll know. At that point, we'll know what the decisions are, and we'll have to make assessments then about the implications for the economy. Those things will happen. A lot of them will happen over the course of, in coming months, certainly over the course of this year. and we'll be adapting as we go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. At the beginning, you were talking about separating the signal from the noise and tariff inflation from non-tariff inflation. Can you walk us through what that looked like over the last couple of months, if there were specifics from the January meeting to now that helped you make those distinctions?
So when we say separating the signal from the noise, that's just a way of saying that things are highly uncertain and that you're reading about developments. The news is full of developments of tariffs being put on and taken off and things like that. Some of that is noise in the sense that it's not really telling you anything. You're trying to extract a signal from that, and the signal is what's going to be the effect on economic activity, on inflation, on employment, and all those things. So that's really when we say signal and noise. Sorry, the second thing was?
Or similarly for tariff inflation, non-tariff inflation, ways that you're making the distinction.
That's sort of a special case of that. The idea being, and I do think that the first 2 months of this year are a great example. You've got high readings for goods inflation after a string of readings that average close to zero, and you have to ask, it's coming during tariffs, but you can't. It's very hard to actually scientifically go back and match up those increases and say, yes, I can prove that that's from tariffs, but it kind of has to be to some extent. Plus noise. There can be idiosyncratic readings in various categories which will shortly reverse, and that happens too, and that could be a big piece of it. I think we'll know. In a couple of months, we'll know whether those were, where that really was from. But that's another case where I think it's going to be very, very challenging to unpack the inflation that we see over the course of this year and be able to say with confidence how much of that came from inflation and how much of it, from tariffs and how much of it didn't. But that's what we'll be doing. And we'll be doing that, and so will everybody else, and we'll all be trying very hard to make that assessment. And, I'm sure we will make a lot of progress on that, and we already have, but it's going to be a challenge.
Do you have a sense yet as to what, in your mind, would make something cross from noise to a signal, what that threshold would look like?
It would depend on what we're talking about. I mean, obviously, you're looking for direct evidence that particular pieces of inflation are or are clearly not caused by tariffs. For example, if it's something that was, in the service sector that was far away from anything that's tariffed, you might think, okay, well, that is, like, frankly, housing services inflation, which, by the way, has been behaving well, which for some time was kind of our problem. Now it's slow, but it's definitely, moving down in a very good way. It's more now with goods and to some extent with non-housing services inflation.
Kelly.
Thanks for taking our questions, Chair Powell. Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth, and it's a pretty good economy. But people are unhappy because of the price level, and we completely understand and accept that.
And just to follow up, why are you still projecting 2 rate cuts this year if your own projections show inflation higher for longer? Does that mean you see a slowdown in economic growth as a real threat?
So I think remember we came into this with, at the December meeting, the median was 2 cuts, the median was. And so you come in and you see, broadly speaking, weaker growth but higher inflation. And they kind of balance each other out. So you think, and unemployment is really, there's really only a 1/10 change. So there's just not a big change in the forecast. There really isn't. Modest, meaningfully higher growth and meaningfully higher inflation, which call for different responses, right? So they cancel each other out, and people just said, okay, I'm going to stay here. But the second factor is it's so highly uncertain. is just, we're sitting here thinking, and we obviously are in touch with businesses and households all over the country. We have an extraordinary network of contacts that come in through the reserve banks and put in the beige book, and also through contacts at the board. And we get all that, and we do understand that sentiment has fallen off pretty sharply, but economic activity has not yet. And so we're watching carefully. So I would tell people that the economy seems to be healthy. We understand that sentiment is quite negative at this time, and that probably has to do with turmoil at the beginning of an administration that's making big changes in areas of policy, and that's probably part of it. I do think the underlying unhappiness people have about the economy, though, is more about the price level.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask, first of all, if you could clarify, you were talking about how tariffs were a good part of the uptick in the inflation forecast, and I was just wondering what that specifically refers to. Is that the tariffs that have already been put in place? Is that anticipating some of the tariffs that might be coming on April 2nd? And then also, if you wouldn't mind, talking a little more about the balance sheet decision and what drove that. Did that have anything to do with expectations of how the debt ceiling, raising the debt ceiling, might affect the reserve supply?
Yeah, so in the SEP, you'll see that there's not further progress on core inflation this year. We're kind of flatlining, going sideways. We don't ask people to write down how much of this is from tariffs and how much of it is not, but some of it is from tariffs. We know that tariffs are coming in. We know that they're probably already, all forecasters have tariff inflation affecting core PCE inflation, core CPI inflation this year, without exception. I'm not aware of an exception. So it's in there. I can't tell you how much of that it is. In terms of the balance sheet, so yeah, I think, I guess the way I'd say it is, it was the flows in and out of the TGA that got us thinking about it. But as we thought about it, we really came to the view that this was a good time to make the move that we made. And broadly, committee that came around to the view that we would do the same thing we'd already done, which is once I guess in June, was it June, whenever it was, we lowered the pace of QT, and we're just going to do that again. We're going to cut it roughly in half. And the sense of that is, if you're cutting the pace of QT roughly in half, then the runway is probably doubled. Okay, so it's going to be slower for longer. And people really like that. People thought that's a good idea. It's like a plane. You can think of it like a plane coming in for a landing. As we get closer, and by the way, we still think that reserves are abundant, although you begin to see some of the things we look at begin to react a little bit, but we still think that they're abundant. Now, of course, now the TGA is emptying out, so reserves are higher now, so you can't really see the underlying signal. So we came around to the view, and it had a lot of appeal, and so we did it. It has no implications at all for monetary policy. It has no implications at all for the ultimate size of the balance sheet. It isn't sending a signal in any hidden way that you can try to tease out. It's just not there. We're basically, it's very consistent with our plans and our practices that we've published and that we've followed since we began this, what is a very successful rundown of the balance sheet. Again, the second time that we've slowed the pace, and we've said that we would stop when we were somewhat above the level we judge as ample. And clearly we're not at that level yet, but we're going to be approaching it more slowly. It's a common sense kind of a thing, and it had pretty broad appeal, I will say.
Claire.
Claire Jones, Financial Times. You said in January, Chair Powell, that inflation expectations remained well anchored. Would you still say they remain well anchored today? And just to reiterate the question others have asked, if they're not so well anchored, why hasn't there been a more radical shift to the policy path today? Thank you.
So when we talk about inflation expectations being well anchored, we're talking about longer run inflation expectations. And they really haven't moved much, I mean, if at all. There's one reading that everyone's focusing on that it's higher, but the other survey readings and the market-based readings all show relatively well-anchored inflation expectations. You would expect that expectations of inflation over the course of a year would move around because conditions change, and in this case, we have tariffs coming in. We don't know how big, what's speed. There's so many things we don't know, but we kind of know there are going to be tariffs, and they tend to bring growth down. They tend to bring inflation up in the first instance. So I would say, I'm not dismissing what we're seeing in short-term inflation expectations. We, as I mentioned, follow that very carefully. But when we say expectations are well anchored, we're really looking at longer terms, 5-year and out, and there's really no story to tell 5 years and out, either in market-based or in surveys. But we'll watch it. I mean, we're not we're not going to miss any evidence that longer term or medium term inflation expectations are moving.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Treasury Secretary Bessent has observed that a large share of job growth over the last couple of years has been in what he calls government or government-adjacent sectors, healthcare, education. Do you agree that there's some weakness in underlying private job growth, and do you see the composition of job growth as something that has policy implications?
So that has been the case. We talked about that over the course of the last year. There were some good number of months and times when a lot of the job creation was concentrated in, educational institutions, healthcare, state governments, things like that. There were also times when private sector job growth has been moving in a healthy range. I mean, they're all jobs, but and remember, we're at very low unemployment for quite a time now. So I think it's a good labor market, but it's something that we monitor carefully. From our standpoint, employment is employment. But the elected government is entitled to have, we don't have policies that address different kinds of employment, but the elected government has a different role, and they can have those.
Can I do a quick QT question? Does the committee envision at some point tapering the MBS runoff as well?
I think tapering it, I don't know. There's no plan to do that. At a certain point, we'll stop runoff. And we may or may not stop MBS runoff, though, because, we want to stop runoff in net at some point. We haven't made any decisions about that. We want the MBS to roll off our balance sheet. We really strongly desire that. So, but we haven't made any decisions about that. I think we'd look carefully at letting that keep going, but hold the overall size of the balance sheet in, constant at some point, a point that we're not out yet.
Simon.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at, we're at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
And sorry, standing here today, would you be surprised to pivot back towards rate cuts in May?
I think we're not going to be in any hurry to move, and as I mentioned, I think we're well positioned to wait for further clarity, and not in any hurry.
Matt.
Matt Egan with CNN. Thank you, Chair Powell. The Fed statement released today removed a line that previously said the committee judges that the risks to achieving its employment and inflation goals are roughly in balance. Can you explain the decision to remove that line? Does it mean that you're now more concerned about inflation or about employment?
Actually, it does not mean either of those things. Sometimes with language, lives its useful life, and then we take it off, and that was the case here. There's really not meant to be any signal here. Over the past year, conveying this sense of the balance of risks was important, that they be in balance or close to being in balance. That was useful as we approached liftoff, if you remember, but we're past that. I'm sorry, no, beginning to cut. So we just took it out. I actually would say that the more important thing now about risks, and this is in the pages like 10, 11, 12 of the SEP, if you look, participants widely raised their estimate of the risks to of uncertainty, but also of the risks to growth and our employment and inflation mandates. That's a more salient point now than whether they're in balance.
Just on the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape. It's the soft data, it's the surveys that are showing, significant concerns, downside risks, and those kind of things. We don't dismiss that. We're watching it carefully, but we don't want to get ahead of that. We want to focus on the hard data. If that's going to affect the hard data, we should know it very quickly, and of course we'll understand that. But you don't see that yet.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you look to navigate higher inflation and lower growth, the Fed has talked about heeding the lessons from the 1970s. Is the Fed willing to have a recession if it means breaking the back of inflation?
Well, fortunately, we're in a situation where we have seen inflation move down from higher levels to pretty close to 2%. While the unemployment rate has remained very consistent with full employment, 4.1%. So we now have inflation coming in from an exogenous source, but the underlying inflationary picture before that was, basically 2.5% inflation, I would say, and 2% growth and 4% unemployment. So that's what we did. That's what together the economy accomplished. So I don't see any reason to think that we're looking at a replay of the 70s or anything like that. Inflation, underlying inflation is still running in the 2s with probably a little bit of a pickup associated with tariffs. So I don't think we're facing, I wouldn't say we're in a situation that's remotely comparable to that.
And last month, the idea of a Doge dividend was proposed, which would send $5,000 checks to every taxpayer from Doge savings. President Trump and Elon Musk have supported this. There's reports there could be a bill introduced on Capitol Hill. What impact might that have on household savings and spending in terms of your growth and outlook for inflation?
It's not appropriate for me to speculate on political ideas or fiscal policy for that matter, so I'm gonna pass on that one. Thank you.
Daniel.
Hi, Chair Powell. Daniel Avis from Agence France-Presse. You mentioned that tariffs are already having at least some impact on inflation. I'm just wondering how you and your colleagues on the FOMC have been thinking about the possibility of retaliatory tariffs from other countries, especially with April 2nd coming up. Was it something you considered during this meeting? Thanks.
So since the very beginning, we've had kind of a placeholder. The staff has a placeholder of a range of possible outcomes from tariffs and from trade policy generally, and they generally assume full retaliation in those, and so that's kind of baked into the numbers. What happens? It will be complicated, and there will be some retaliation and some not, and all that. But ultimately, they're trying to, with the placeholder, give us a broad sense of what this might look like. When we actually know the specifics, we'll be able to have still uncertain, but better informed forecasts. So yes, that's in there.
Last question goes to Jean.
Hi, Chair Powell. Jean Young with MNI Market News. Had a couple questions on the balance sheet change that you made. So the minutes had initially described your discussion on slowing QT as temporary until the debt ceiling is resolved. But from what you said earlier, it doesn't sound like there's a desire to kind of regain the pace of QT that we have at the moment after the debt ceiling is resolved. Is that the case?
Yeah, so we looked at pausing and we looked at slowing, and really people came together very strongly behind slowing, not pausing, for a variety of reasons. And so people really came to be, pretty strongly in favor of this move. It slows down the path and probably lengthens it, doubles it effectively by slowing by half. That people thought that's a good place to be. It'll help us assure that this path is a smooth one as we get closer and closer to that. So that's how that came about.
Well, I guess my question is more, was that meant to be a temporary measure during the debt ceiling episode, or?
It was the TGA flows, Treasury General Account flows, that got us thinking about this. But the more we thought about it, we came around to this. And it is, yes, it was provoked. The original discussion was provoked by that. But I think what we came up with, though, was broader than that and different than that. It does address that issue, but it really is also, it fits in really nicely with our principles and our plans and the things we've done before and the things we said we would do. So that's why, pretty strong support. I just say it's nothing to do with monetary policy, nothing to do with the size of the balance sheet. It's just kind of a common sense adjustment as you get closer and closer. Let's slow down a little bit again, and that way we'll be more and more confident that we're getting where we need to get. You can take our time getting there. We're shrinking the balance sheet every month, and we think it was a good play, and as I mentioned, well supported. Thanks very much.
And that's a wrap. The fam! Another Bitcoin. Another FOMC checked and marked. Drop a like, fam. Consider subscribing to the channel. Turn on those notification bells. We thank you for choosing us. So, my initial reaction is not bearish. What happened is not bearish. I think the market purposely is receiving it with a pause, and they're not reducing, right? It's kind of like slow down for QT, quantitative tightening, and you're seeing right now the price, Bitcoin reacting, XRP reacting. Just give it a few more hours, I will say. I think in the next couple of hours, as Asia wakes up, Europe wakes up, Australia, and other different regions, South Korea too, which is a big one for XRP, should be able to hear what up. But I think they're not willing and able to tell us if there's going to be a cut in May, which is the next FOMC meeting. According to the CME group, they're looking at June in the summer of 2025. But we'll just have to wait a little bit more. Today, the big breaking news is that Ripple is basically winning the case, and the SEC is dropping the appeal. So there's a few things just to clarify, from the SEC and Ripple. Now Ripple is in the driver's seat when it comes to the lawsuit, but it's gonna be basically it's now people are officially saying it's over, right? I'm happy to see XRP moving, but you can always tell that people are very ready to sell and take profits and manipulate and all of that. But it is what it is, right? It goes up, goes down. That's kind of like the way to go, guys. Who won with here's the poll coming in with 5.7 votes, bullish with 29%, and I just want XRP pumping with 29%. Good stuff, everybody. Wow, that was pretty cool. A lot of people will say a complete nothing burger. Other people will say, let's go, we're up. Realistically speaking, less than 12 hours ago, XRP was 229. Right now it's 249. Bitcoin was under like 83, 84. Now it's 85. I will say that we got some pretty good news for crypto, and we'll just have to see how today ends. It's not the end of the story. We just have to wait and see a little bit more. All right? Some people say XRP great day clowns. Everybody calls people clowns nowadays. It is cool. But I want to say thank you to all the donors, thank you to all the new subscribers, to all the new viewers, to all the new community, the members too. Welcome, guys. When you look at and when you try to understand what's happening, this is going on right now. Price of XRP and the price of everything has pumped really nice with 11%, not much, but a decent one. You know, after being 247, back to 222, and now to 259. 260 is going to be that level, guys. So we'll be watching as the days go, see how this week ends. But as of right now, well, I think $5, like I've been saying right now, $5 starts now. Give or take 2025 shouldn't be a problem because we have over 10 ETFs ready and able to get approved. Paul Atkins, the SEC chair, that's confirmed but not approved by Congress. Basically, it's still waiting to get, sworn in. He's still not there in the office, so we gotta wait for a few things so things finally change for the better. But as of right now, guys, that's what I got for you. Don't forget to check us out here on X. Let me go ahead and send you this link if you want to know the latest information. We got the BTCC link, everybody. First link down below. And also, the link down below. Want to trade and start putting some positions. Really happy to be welcome all kinds of new investors, guys. But yeah, that's what I'll tell you. It was a nice one. Woke up very early over the last, 5-6 hours. We've been talking about this. And obviously, it's us and the millions in the world. But still remember, we're so mega early. We're still so mega early. The typical investor and even the typical person has no clue what just happened. So let's go ahead and zoom out, and hopefully this is gonna help us soon get out of the $2 because I know 3 is very easy to do. It's just that, a lot of things going on and people trying to sell. Everybody, thanks so much for watching. I'll see you next time. And you guys, take care. Hey, Kimo, what's up, buddy? It's been a while. Good to see you, man. Big bad Billy Gates in the house, too. Let's go. So, guys, follow us on X and take a look at BTCC because there's a lot of things going on, too. I want you to win, and there's all kinds of opportunities. Man, that was crazy. That was a nice XRP day, man. But hopefully, we're going to be hearing more news ahead. And live streaming is apparently way more complicated. It is. There was no audio. I try to listen. Let's go, fam. Thank you, guys. You have a good one, fam. You have a good one. We'll see what happens in a few more hours because we got to let it breathe a little bit. But hopefully we don't go lower than 220, 230 because that's the price that we started, right? So it's just as far as buying the dip and sell at the reap and the greed. Peace.